What's up, guys? Today I am going to be talking about Robinhood's upcoming IPO, some important information, details regarding it, and then just some thoughts from my end. Keep in mind, I'm not an expert. I don't know what it's going to do, but I have some pretty good guesses, and I want to present a case of what I kind of think it's going to look like after they IPO, despite all the problems and things that they've done. So let's get started. All right, so looking at this article from CNN, I'm going to post every article that I discuss down below so that you can check it out for yourself. I find that a little easier than the S1, even though I did go through that just to kind of verify some of the numbers. One of the first things that catches my attention is Robinhood could soon be worth 35 billion, is what this article says. Now, keep in mind that their revenue is only 959 million, as it details here, which was a small profit for them. One of the things that kind of gets me about the whole Robinhood still IPOing after the controversies that they've had is the fact that they're talking such a big number. That is a hesitation for me. I don't buy that. Is it more valuable than 2/3 of the S&P? Maybe. But I know, especially with the GameStop trade and all of that, people were piling in and spending a ton of money on the platform, but a lot of people went away from it. I used to use it. I'm glad that I don't anymore, really. And, because of that, I've seen a lot of skepticism around using the platform in general. So, again, that number seems extremely high to me. Now, in regards to how they arrived at 35 billion, if you look, they actually reference TD Ameritrade's IPO in 1999. So while I can kind of see that there is some kind of basis, again, there's a vastly different situation. If you keep in mind that back then commissions were a thing. Right now, there's all this controversy over payment for order flow that Robinhood has taken part in, and that's such a huge portion of their revenue that's got to be in question. Continuing in that same vein, Robinhood also was levied one of the biggest, actually, fine in history by Finra. It ended up being 70 million. It was two parts, I believe, 57 million and 13 million. So again, having had that controversy, I feel like Robinhood is going to be a target for future legislation and could be impacted down the road rather heavily because, again, they kind of went from the everyman's hero in regards to getting everyone into the market to suddenly it was stealing from them by preventing them from cashing in on, be allowed to buy more GameStop, AMC, etc. And those stocks fell because of it, because buying pressure died off. Now, not to discount the little guy, since there are a lot of investors that have come in due to Robinhood, but there is something that I want to point out in regards to this play money idea, because this is what I've actually seen from a lot of people, is that people have either completely moved off the platform or they've reduced their Robinhood holdings rather low. Well, keep in mind that a lot of the people using Robinhood, it's very, very small amounts. It was reported here that it was play money, $240 a user. Now, if you have enough users, that doesn't make such a big difference. I have seen a lot of people who still use the platform and still have large sums. However, again, you're looking for growth in the platform, and maybe that's still there, but I'm hesitant. I'm hesitant on that. Now, this portion of the article was kind of interesting to me because this one, a little more than the CNN business one, was a little more opinion piece. And there's this question of, will Redditors bail out investors who hold Robinhood stock? Listen, if you go based on Reddit, just the little bit that I've been on it recently, WallStreetBets is not a fan of Robinhood. As a matter of fact, a lot of those people have migrated off the platform completely or have started to move away, which I think is a good idea. But again, it's one of those things where there's kind of this narrative of Reddit and Robinhood are suddenly the big names that get thrown around. And the question is like the average retail investor, if they're figuring out these things and seeing those things, I know a lot of people that used to be all for Robinhood They no longer are. That's a small sampling, of course, but again, seeing that, WallStreetBets, all of this, I think this isn't really a question that a lot of people are choosing to second guess whether to go to Robinhood or other platforms such as TD Ameritrade, Fidelity, etc. All much better platforms in my opinion. All right, now let's talk through some of the more recent IPOs that have gone through. Now, I found this list interesting. Every IPO is different, every company is different. I understand that. But I wanted to look at these high profile IPOs from last year in comparison to this year. Now, keep in mind, we've got a historic bull market. Right now, there's a lot of chop in the market, so it could be a lot different. But I kind of want to get a general idea based on IPOs. I feel like a lot of them tend to move somewhat similar, whether they're low profile or high profile. I would consider Robinhood absolutely high profile. It's all everywhere. There's articles about it everywhere. So if you look at this, predominantly all of these IPOs had relatively large, debuts on the market. Palantir at 113%, 84% for LI. I forget the company. I've traded a few of these, like Rocket's only, less than 1% up. But then you have a few that went against the grain. GoodRx, DoorDash is down, Airbnb is down. So there's really this question of, can you kind of diagnose that? Long story short, I think that Robinhood's IPO may get some hype and may be worth a trade to the upside at first. However, I think if you look at them on a fundamental level, you look at all the legislation and discussion around them, I think long term, they're not a good investment right now. That's just my personal belief. That's not investment advice. That's how I intend to play it. I'll keep an eye on the IPO and see if it's worth a trade to me. But I just want to point out some of the factors in regards to IPOs. Also, there's one other piece that I want to show you in regards to something that Robinhood has been pushing really, really hard. And I'm kind of interested to see what everyone's take is on it. I don't know that I'll utilize it, but Robinhood has been pushing their IPO access features or functionality, whatever you want to call it, where they are allowing users to take part in an IPO, including their own. Kind of bizarre. Don't really like that. But anyways, and I'll show you that right here. So here's the first email that I got 12 days ago in regards to Outbrain. Here's the next email regarding Robinhood itself as of 9 days ago. That same day, I also got another email in regards to Riskified. And finally, the discussion around their roadshow. Now, again, maybe this IPO access, along with the cryptocurrencies, along with some of that other stuff, does give them an opportunity in regards to revenue streams. However, again, I draw a lot of skepticism. The reason why is because of all the scrutiny, and the biggest thing is Congress taking a look at the payment for order flow idea, the way that sat wrong with so many investors, including myself. And so at least long term, I'm not looking at Robinhood and going, yeah, I want to invest in that. As a matter of fact, there's been a lot of questions on platforms like WallStreetBets. How do you short this? So if it's optionable, I may look at grabbing some long-term puts personally, because again, I think they're gonna get hit hard. I'm actually surprised they're attempting to IPO so soon after that debacle. But again, they likely know a lot of things that I don't. They have a lot more user information, but just the feel that I get, a lot of people don't trust them right now. And I think it's rightfully so. I think it's well-founded. What's your opinion? Let me know down in the comments below. Thanks for stopping by and have a great rest of your day.